My name is Nyasha and welcome to Accounting Explained. So today is lesson number 2. I will look down, so do forgive me if I do look down. But today we're going to talk about companies. What are companies? Going to start there because we're not going to make financial statements and we don't know what companies are. So we need to first understand the concept of the different type of businesses that are out there. It may be new to you. It may be something that you briefly understand. So here we go. So we're going to talk about 3 in particular. There are many more, but they simply the sole trader, and there is a partnership, and the company. What we'll call a company, is a public company or a private company. So when we come to the terms of a sole trader, what comes to your mind? The clue is sole trader. It's one person trading within the business. And as a sole trader, don't mistake it to seem like the business is being just run by one person, but it's owned by one person. So you can find, if I create a business today, and let's say I create a business selling shoes, and I'm the only owner, I do hire maybe 2 or 3 people, I'm still considered a sole trader because I own it. And we will go into what that means in terms of limited liability and unlimited liability in another video where we'll talk simply about limited and unlimited. Let me just put a note for that. With the sole trader, what's most important for you to understand is you own the business, and the way the financial statements will be made will show that you will put in the capital. And in a situation, if you may pass away or you are bankrupt or you owe people, it will come from you as a business, as a sole trader. So that's number 1. That's another business that you could have. You could be a sole trader. And as we go into the financial statements, you see how particularly the sole trader and the partnerships and companies, how they differ, especially in your balances, in your financial statement position, which is also known as the balance sheet. And also within how, with the sole trader, you might just have just an income statement. We'll get to it. And with a partnership, you also need to create an appropriation account. You need to create certain things to share within a partnership. So with the sole trader, there are certain ways you will follow within the statement of financial position. But let's not get ahead of ourselves. Let's continue. So the sole trader is one person. In the UK, they don't require VAT unless you're making profit of above 85,000. You will then have to apply to have VAT added onto your sole trader business. And then when it comes to partnerships, it's all about partnerships. And with the partnerships, it's more than one, definitely. But there's a limit. It can be 2, it can be 3, and all the way up to 20. You can have partnerships. Let's say you and I create a business together. We have a partnership. And that will show in terms of your certain financial positions, certain statements that you will make at the end of the year or the quarter, because as an accountant you will make a lot of statements. So the reason why we're making statements are for decision making and to understand what are we doing, because you cannot just walk on a road. I always say you cannot just keep going on a particular road and you don't know where you're going. Like, just keep walking for what? So at least as you're trading, the reason why we're creating the statement of financial position is to see, okay, with our day-to-day business, are we making a profit? What's going on in the business? So when we're talking about the statements, we're actually talking about, okay, we're going to create them in a certain way for partnerships. We're going to create a certain way for sole traders. And with partnerships, we have to include the fact that we're partners. So we might have agreed that I get 60%, and you get 40% of the profit. You may decide to have less, but it's split between the 2 or the 3 or the 4 or the 20. And then when it comes to companies, that's what it's about. Companies, You could have a private company and a public company, and it goes into limited and unlimited liability. But that one we'll talk about alone. When it comes to today's reason was for you to first getting an understanding of what these companies are, what these type of businesses are, so that you understand how and why we create certain statement of financial positions for these businesses. So in a situation, a sole trader might want to know, okay, is it possible that I expand? Where does that information come from? The statement of financial positions. You guessed right. Within a partnership, they may decide, oh, one now wants to leave or something's happening. What do they do with the money they invested? What happens then? It's seen within the statement of financial position. So when we're looking at our statements, we need to realize that accountants and statements of financial positions play a big role within how to make decisions within a company. So whichever company is, you do need to have financial position statements. You need to have all the five, so that all the five statements, that is the statement of financial position, the statement of cash flow, but it all depends on where you are and how you will prepare it. There are many different ways you can prepare it, but it's all meant to be along with the accounting standards. However, the most important thing to remember is that the reason we make these statements is for that decisions can be made. It's for decisions to be made, and it's also for stakeholders. I'm coming with the big words. What is a stakeholder, Yasha? A stakeholder is someone interested in the business, someone who may be particularly interested in the business, whichever way. So you could be a stakeholder of Tesco. Why Tesco? So Tesco is it's a grocery store. I don't think that's the proper term, but it's a grocery store within the United Kingdom. A stakeholder could be just anyone walking in, a customer. They might need to have that information to understand, okay, if I look at their statements and see they're making a profit, I can still continue shopping at Tesco for the foreseeable future. Or they could use that information and say, oh, it seems like they're not staying in business for long, so maybe I need to start looking for a different grocery store. Simple things like that. Customers need it. We can also see that the government will need statement of financial positions. This will help in the sense of how to tax that particular company, how to help the company if the company needs help or is looking for loans, and all that information can be found in the positions, in the statements that are within the company. Another one is employees. I think that's a good one because you're employed at Tesco. You want to understand, is my job somewhat secure? So if you're seeing that, oh, the past 3 years they have not been doing well and they are struggling, it might be a time to start looking at them applications, going on to LinkedIn, going on to Indeed, going somewhere. Hence why we need to understand the importance of making the statements properly, and not properly, I would say that I've used that word lightly, making those statements accurately and being able to read from them accurately. So it's important as one preparing these accounts to make sure there's minimum or no errors within them, because a lot of people within the area, within anywhere, will use that information. So it's even suppliers will want to see, are you able to pay back your current people you owe money if you're going to buy your supplies on credit? Everyone can use the information from the statement of financial position, and hence why it is important, because it's a way of communicating. The statements that we're going to start looking into is our form of communication. Just like sending a message, the statements can communicate quite a lot. And we've gone through all the stuff actually that I wanted us to go through today. It was about the type of businesses, and also why do we have these statements? It's for communicating with the stakeholders. What are the stakeholders? Who are the stakeholders? The customers, the creditors, the government. And why is it important for us to create these properly? Because accurately, because it's important to so many people. It will have to be done accurately. It bases so many decisions. There's so many decisions that can be made from there that we'll go into later on. And it can be even as simple as within the company, they are thinking of our company that I created now. Let's say we are selling shoes and want to create another type of shoe. We can look at our statements, not just this current quarter, the last couple of years, to see, are we able to start marketing this new product? And if we will, how much do we have for us to market? Those things are important. And where do we get them from? The financial statements. So we will go into, in our next lesson, I would like to call them lessons, different types of lessons within the accounting cycle. The point of this is to understand then, okay, fine, we're making these financial statements, but how are we making the statements? I've mentioned that we're going to make these statements that are so important. But how? Do I just rock up and just make a statement? Is there a process? And in accounting, there are always processes. As within the first video, if you haven't seen it, please do watch. About the accounting cycle more, not next week, next episode, next video, we'll talk about the details, more into the details of the accounting cycle. We'll talk about the accounting cycle. They're these big words that they keep using. Books of prime entry, what are those? Why do we have them? But books of prime entry begin with step number 1 or step number 2, or is it step number 3? Don't worry. Next episode, we'll learn more about this. Thank you for coming to Accounting Explained.